ever plan to go to the west. Just take my way, that's the highway, that's the best. Get you kicks on Route 66.
Hello. How's everybody doing? So this is 50 pips, 31st, 12th, 2013. So for once, I'm not going to be talking about markets really. I've decided to mix things up a bit, right? So we usually do a year-end note, which I post on the blog. And this year I thought it might be just a bit nicer to mix things up a bit and just do a video, or rather a voice address to the nation. So basically, again, before you know it, find myself here end of the year again. Time's a very precious commodities, and we see that it just keeps on picking up speed every year. A couple of trades here, a couple of webinars there, and that's pretty much 2013 done and dusted. So time really does fly when you're having fun or doing something you love. So it's been another great year. I really want to massive thank you to all my students and followers for this year. It's been to a certain extent, it's been a bit of a one-way train, right? Not as dynamic as we tend to like, but still very tradable, right? Especially for traders that manage to focus on the charts and rather than on what they thought should happen in terms of FOMC, taper, euro, or the charts, or traders who really got confused by the noise. And that's why one of the most repeated things I said was, don't get confused by velocity of moves inside ranges when we're consolidating. This year we talked about don't get stubborn fighting flows, right? And the ES is really a great example for that. So people who focused on the market, on the charts and trading the moves, it was a pretty straightforward year. I mean, the easiest thing is just to go back and look at an ES chart, right? We start the year, what is it? Let's look at this. We got about, we're starting the year right about here. And what happens, it's a steady climb higher, right? There were a lot of interesting opportunities to short, but very tactical, very selective opportunities, right? Apart from that, the market was just in a pure grind higher. And yes, it's healthy to see the market correct more. It would have been healthier to see more two-sided action, but we don't always get what we want, or the market doesn't always behave the way we think it should behave the majority of times, right? So if you see all the way this grind higher, there was a very nice opportunity to get short around May, nice little retracement. And we held the most recent base there, so it was a very nice retracement, and then we continued to trade higher. There was a nice little opportunity here to get short once again in August. Nice little retracement back down. There was another opportunity to get short into September. Very nice little retracement, but you see every time we get these retracements, the market is buying the dip, right? So there were opportunities to short, but it was a long year, right? So it is what it is, and you have to focus on that. Also, the euro is another good example, right? We always talk, and we usually talk about the January effect, something to keep in mind. And we went into last year, very interesting action, right? If you look at the chart, you had this massive move down. We came into the beginning of 2013. Market pops up into the 50 back of this move from highs to lows, peaks in January, and comes right back down. So a very nice short opportunity at the beginning of the year, right? But then the traders who stayed stubborn, thinking what they should happen, that euro had to die, etc., instead of looking at the chart, it was a pain trade all year round, right? Because we did trigger this short, but bam, we got bought, right? We got bought. Where did we get bought? We got bought right back at the opposing 50 back move, lows to highs. We held a higher low from that low, and then we started to rotate higher. And once we started this rotation higher, we came back down. Everybody's still stuck on that January effect. It has to go lower, but here you go. Here you had the chance, but right now we made a higher high, higher low. We come back, we can't, and that's where it turns, right? That's where things turn for euro, and it was extremely technical. Double bottom, we pop back up. What happens when we pop back up? We've got 100 and a 200 moving average on this chart on the daily. Back up, retraces 50 back of the move from the double bottom to the pip. On the cross of the 100 and the 200, it doesn't get much more technical than this. We complete the 123 extension. Then what happens? Extend the fib, move higher. Now the two moving averages have crossed. We come back down to the pip, 50 back, the 100s right in front of the 200 as a nice support zone. We get bought and we continue the rotation higher. So again, very, very, very technical year. Plenty of opportunities to trade. Some interesting shorts at the beginning of the year, but still extremely technical. Just not as two-sided as we'd like to see, but that doesn't mean it's not very tradable, right? So again, another year where a lot of stubborn people had trouble, and to that, without, I don't want to get any hate mail or anything, but I think it's really important, don't hate, don't take it personally. It's just the market moving, right? And market doesn't care what I'm doing, what somebody else is doing, what you're doing. It's just moving, right? And to all the haters and the stubborn traders out there getting mad with Bernanke, the Fed, their broker, whatever, the only thing I'd say really, if you spent even a quarter of the time you spent getting mad on trying to focus on the chart, on what's really happening, and trying to learn what the price action is telling you, well, apart from being more productive with your time, right, you'll find that you'll most likely probably become a better trader and maybe person too, right? But again, love for everybody, but I just think it's the end of the year is a good time to look back on the charts, think of how you traded it, think of how you reacted, and try to take a step back and assess and try and see what you can do differently, what you can do better. Okay. So what else? Again, I don't have anything really prepared. Guys who follow me or who are in the webinar sessions, I don't really like prepared stuff. So I also wanted to do the video because I like the fact of it being live and putting a bit of pressure on me, right? So I think in terms of the blog next year, what I'd like to say is that we'll probably make some changes to the weekly webinar sessions in Q1. So again, the payment plan will probably change to reflect that. So we'll probably add something to that. Second thing is that I'm not going to be doing the live Q&A session on the first Sunday of every month. I'm not going to stop doing those. I'm just not going to do them systematically on the first Sunday of every month because people keep on writing to me telling me that they prefer the YouTube videos. It's shorter, it's quicker for them to go through them if they miss them. So that's going to be the new routine for next year's. Every Sunday I'll just post a YouTube video. It won't be a full Q&A. 1 hour long webinar. I will continue to do those every now and then depending on the action. So make sure you subscribe to the blog, and that way you'll get email telling you when those are so you don't miss them if you want to attend live. Okay, there won't be one again to start the year. I don't think that's fair to the weekly subscribers, so we'll do one there. We'll mark up all the charts fresh, and then I'll start posting those charts on the blog, so plenty of free content. Don't worry about that. Also, in terms of the sections, the category section, that's changed. There's going to be a drop-down menu this year, and it's just going to be to make it a bit less cluttered, but everything's still there. And another thing, just a bit of food for thought, I'll add a category called food for thought. And what I'll try and do is just post interesting stuff, interviews, YouTube videos, nothing really related to trading, but just related to just interesting content, stuff on meditation, on motivation, on life, just things that probably might be out of what you usually listen to. You don't have to listen to them, but there might be some interesting things. So again, as I said last year, I would really like to thank all the active followers that continue to take time to comment on the blog and share the content I provide, whether that's by retweeting or, whatever, sharing it in general. I know how these things work, so I don't do it for you to share it, but it's always nice to see people appreciate the content. So again, a massive thank you to you guys. So as usual, no crystal balls, no magic indicators, no holy grails, right? We're just here trying to be humble students of price action and market psychology and just do the best we can. I'm just going to end with read out something which we always say, I always write down at the end of every year, because I think it's really important, especially for newer traders, is that you need to remember that trading is really an extremely hard way to make a living. You know, don't let anyone tell you that it can't be done, but equally don't let anybody give you the false impression that it's easy and that there are shortcuts. Of course, you know, I'm not going to go on a rant on the whole industry, but still, in general, people or the industry tend to want to make it very nice, the bright lights, the bright platforms, easy peasy, you can make millions, everybody's going to be a millionaire. But that's really couldn't be further from the truth, right? And don't make any trade count too much. You know, no single trade should really make or break you. As I always say, a real trader is formed through consistency, longevity, you know, being here 5, 6, 10, 15, 20 years. That's what means what's really real successful trader is, somebody who can be here tomorrow, right? And despite the fact that not everybody's going to be able to be a trader, not everybody's wired to be a trader. You know, if you tackle this with dedication, discipline, devotion, doing things properly, there's no reason why you can't do this. But keep in mind that it takes time to learn any profession, and trading is not different to any other profession in that way, right? You can't just decide you're going to read a blog, read 2 books, and there you go, you're a trader, you're going to support your family off that. It's just not going to happen, right? I don't want to break any dreams, but some people think it's going to happen. It just ain't going to happen. You might get lucky, but it ain't going to happen, right? So, but if you do it properly, you study, you take your time, there's no reason why it can't happen. So don't let it get to you. Don't make it personal. Don't trade too big. Try and be positive, not only in trading, in your interactions with everybody, and you'll see that it tends to go a long way, and you'll probably have a better time too. Okay, so health and wealth for everybody, 2014. It's been a great year. Have an awesome one. Thanks for listening. Thanks for all the support, and see you back in 2014, guys. Bye-bye.